value investor, legend. Here's a partial score. Red Sox, well, April's over. Yankees, nicely in first place. They look good.
How about that? Bunch of old guys.
The press was a little different this year, and as usual, nobody in the media got it right.
All right.
We did better.
It's like the market.
It's like the market.
Yeah.
We've had you were mentioning to me before we went on. Boy, this has been fun. It's been a
great run.
It's been a great run. Now what? Does it continue?
Well, it's continuing. You know, the deal once again. You know, we always talk about what's going on in the M&A space. Yeah. We still have tremendous deal activity. Yesterday morning, we had 6, 7 new deals. And we had higher bids.
And we had the cash generation underneath that keeps that pressure on, right?
And cheap money, and pretty liquid markets. There are IPOs happening. Businessmen care about buying big businesses. Strategic buying of businesses.
Of big businesses?
Teva for Cephalon.
Right. Let's look at this chart. Dreaded first chart, which shows a skew here between small stocks, big stocks, NASDAQ 100, Apple affected, and the S&P 500. The line going up is NASDAQ 100 do well. Do the bigger cap stocks do better now?
They have been doing a little bit better.
Yep.
Some of the worst performing things are big financials this year, which is kind of surprising. So some of the ugly ducklings, Goldman Sachs, Bank of America, people hate. They're in the press, negative press. Never leave Goldman alone. Goldman was more or less bottomed at 50, but was 80 or so during the real crunch. You know what's Goldman's earned since mid-08?
A lot of money.
$35 a share. Yeah. Stock's 150. They're earning $20. Right?
You'd buy
Book
Goldman
is 130. Here. We own Goldman. We buy Goldman on dips.
You buy Goldman?
I think Goldman's a great large cap financial value guys stock.
Yeah,
Same thing with B of A.
Rex, bring up a Goldman chart back 20 years. I'll give you like 32 seconds.
I don't think it's been public 20 years.
I know. I'm just giving Rex my it's Monday. It's Monday for me. I was away, but Tuesday morning. Grief. Let's talk Goldman right now. What do you like about it? What is the Goldman distinction?
Once again, I'm a sum of the parts guy. Smart guys running it. I hated the Senate report, the investigation report. Some of it read very poorly. But it's given them a lot of religion about how they treat clients and can appear in the press. So, you know, in fact, to me, the Berkshire Hathaway kind of press has been much worse than Goldman's press, frankly. But let's go back to Goldman. I'm a sum of the parts guy. You got 3 or 4 distinct divisions. They're all overcapitalized. Great asset management business. Amazing investment bank. I think more powerful than Greenhill. And you look at Greenhill's multiple. So you apply a normal 18 PE on their asset management business, maybe a 25 or 30 PE versus Greenhill's 40 on the M&A advisory business, and you're setting up a broker-dealer for nothing.
Okay,
with excess capital.
Here's a chart. My team is so fast. There's Goldman, and you can see that ugliness. I mean, forget about the crash.
See that dip?
Yeah.
Okay, that was an aberration, but you look in the middle of the dip, it's 80 or 90. They've earned $35 a share since.
Do they need to deploy cash like industrial companies? Do they need to aggressively buy back shares?
They're very liquid.
Raise a dividend?
They're very liquid. I don't think dividend's the story here. I think it's just an earnings-driven story in this expanding economy where the world needs financiers like a Goldman.
Okay, and then here's a chart of Palooza. Let's bring up Greenhill here. Rex is going nuts back in the control room here. Now, these are not planned, folks. There's no script with Michael Price. So there's Greenhill. They've got the same malaise off the top.
But, you know, this is not diversified. Goldman, you know, through the mortgage mess, you know, they traded more mortgages than anybody. You know, they got the big asset management business. Here, you're just an advisor. But that multiple there is probably 35 or 40 on Greenhill.
Do you care about management succession at Goldman Sachs?
Sure.
Are they so strong that
I think
that'll get solved?
As deep a bench as anywhere on Wall Street. I think, you know, some reporters and other places have made up stories about people leaving. They just make things out of thin air. I think now you're starting to get the line that
What's your second best buy?
B of A is, I think, large cap. I mean, we love the small cap space. But the B of A has been so beaten up, kind of like Goldman. Stock's 12, below book, can earn good money, and Wall Street's worried about the mortgage putbacks because of Countrywide. So, you know, I think B of A is okay.
And you mentioned Greenhill, the smaller, the boutique firms.
No, but Greenhill's expensive for me.
Greenhill's expensive, but the Evercores that are getting all the press, all the love.
Expensive.
All the
And then you got the little guys, the Cowans of the world trying to merge with LaBranche. It's not working.
Yeah.
And the New York Stock Exchange is no way. That's buying buggy whips.
Did you read William Cohen's book on Goldman?
Not yet.
You're going to read it?
Sure.
I mean, it's a history there, and like you say, they've got religion about PR.
And you can go become a partner at Goldman here by buying 100 shares at 150.
What are you reading right now?
Oh, God, I've been reading a lot of fiction, actually.
History of the Red Sox collapse,
I've been reading a lot of fiction. Not a lot of Red Sox history.
That's good. I want to bring up NSM. Here it is right here. National Semi. I'm sorry. This is a sea change deal. I was stunned at the valuation. What was your reaction? I've been dying to ask you this question. What was your reaction when you saw what synergy costs?
Well, what I got to tell you is this is sending me a big message of what businessmen think about where we are going forward. I mean, we had potential deal for Seagate. They passed on it. Western Digital's doing a big deal. Seagate's actually doing a big deal. This thing is, it's just telling you how bullish people feel about the future.
And it revalues the game theory of M&A, because the idea here is there's one or two or three players maybe in each category, and they do have to strategically respond to each other, don't they?
And they've got to compete with private equity guys who have unused funds.
Well, everybody has unused funds. Have you ever seen us up to our eyeballs this much in cash?
One of the reasons I'm less worried about this ending of QE2. The Fed's not going to drain all the liquidity out of the system. The banks have ample lending ability.
And then you've got inflation behind you and maybe a nominal feel here that equities are the place to be. I mean, do you agree with Bill Gross, the bond market's essentially done, that the easy money's made?
Done.
Let's bring up the break-even chart here. Inflation expectations. This is just one indicator that economists use, folks, of what the Fed can do. And you can see over in the right-hand corner that surge up in the five-year forward break-even. You can see the disaster there in 08, 09. Up we go, and then inflation's back. If I'm in inflation, Michael Price, I really just got to be in stocks, don't I?
You do. I worry most for our society and the world about the food inflation more than oil. I think oil's pretty much run its course. People will cut back. Plus production's ramping up.
Right.
If you see what's happening in some of the plays, not just shale plays, but basic production plays around this country and the world, production's ramping up. And people will cut usage north of $100 a barrel. Food, you can't do the same thing. You can't carpool for your dinner, right?
Yeah.
So I think food's going to be really hitting home this next 6 months, and it's going to spook people.
Well, when you look at the food play, how do you play that? Do you? I mean, it's not your type-owned Caterpillar, I would suggest. Is there value?
Well, you got the Archer
industrials?
Daniels Midlands, the Conagras, the Ralston, Purina, Railcorp, which we think had a bid a few months ago, maybe another bid. So there are ways to play it, but those guys are getting hit hard by commodity costs. Mm-hmm. So you want to ideally own the farmlands of the world, which is not what we do. So I'm not so sure that the stock market is the right way to play food commodity.
Okay.
I mean, getting long, we own something called Farmers Brothers that's sitting with a couple of million pounds of coffee in a warehouse, probably carried for, $2 a pound, and is trading north of $3. But, that's a unique.
Yeah, here's the century of food. See if you can bring up Farmers Brothers, Brothers chart.
It's very small cap.
See if we can find it. I challenge you, Rex, to find Farmers Brothers.
FARM.
A century of food. This is from the IMF back to 1900. And you can see the gift we got in the last 10 years, and up comes that food inflation. You say you can't play that in the equity markets. What can you play in the equity markets?
Well, once again, I think the energy sector is spent. I think you're seeing the toppy action in the oil and gas sector. I still like the industrial group and some retailers, some beaten up retailers.
When you talk to the Danahers in Emerson Electric, those
love it.
successful companies, are they out there looking to buy things?
Look, Danaher's just closing the Beckman-Coulter deal at a huge premium. And if you take what they're paying for Beckman-Coulter, a test company, and apply it to Becton Dickinson, Becton's worth 140. The stock's 86. And Danaher is as smart as they get.
Yeah, see if you can bring up BDX, Rex, if you can. Becton Dickinson. Just as one idea. Now, you got Becton-Coulter, and how, in your history, how do these managements actually respond when they see these transactions? Is it panic? Is it a measured attitude? Do they wait around for Friday night when somebody calls?
They first look at who's making the call. If it's Apollo, you saw that Railcorp didn't answer the phone. Mm-hmm. If it's Berkshire, for Lubrizol, they not only answered the phone, they said, come and get us. Burlington Northern, they laid down for Buffett and said, come and have me. For no premium. It was ridiculous.
What did you think? So the story here is every deal is different.
Every personalities. Yeah. It's the people.
That's what I wanted to get at.
It's not just the numbers.
Would you like to comment on the Lubrizol disaster for Mr. Buffett?
We should be past it. I think there are lots of other issues. Mike Steinhardt spoke last month, I thought, very well about certain aspects. But there's some there's some taint there. For me, all I care about is the stock cheap at $124,000 a share, and I always know that closed-end funds trade at 20% discounts from NAV. Right. So if this stock is okay and it's a 20% discount from NAV, NAV is $160,000 or $70,000 a share. I can't get there, so we don't own it. So we'll see what happens.
Here's Becton Dickinson. Full disclosure, folks, I'm a modest shareholder. BDX, Ed Ludwig's story. I mean, what happens here is you get a fever within a sector, is what I would agree. Who drives that fever? Is it just a simple game theory where each manager is going, what about us, what about us? Or is it the private equity money?
This right here is as clean a balance sheet as there is, A. B, consistent earnings growth. C, in products that hospitals have to keep replacing. Plus, they've got great R&D, and they're embedded. I mean, they will continually earn their $5.50, $6 growing nicely. Right. Worldwide business, the weak dollar is going to help them, and nobody can kick them out of a hospital.
I would suggest that one of the quiet stories this year is foreign money is going to find the U.S. They're going to find equities as well. This was a big topic at Milken Institute yesterday with Nora Rabini. Do the sovereign wealth funds start buying minority interests in American companies?
I'll tell you, if you can buy a minority cheaper than majority, I mean, that's what I want to see. Paying premiums. I mean, remember when the sovereign wealth funds paid above the IPO prices for some of the private equity firms? Right. They really regret that.
Yeah, so they'll come in and take up many minority interests.
Why pay a premium?
I want to focus, see if you can bring up elegant chart one. We're going to save it for the next block, but bring it up now. Just growth versus value. And the interesting thing here is there's not much difference. This was all boats rising for 2 years. Does there become a distinction, more of a distinction now between value and growth? Is this one of those 2 out of every 11 or 12 years where value outperforms?
No, value outperforms over long periods of time consistently. If you look at the returns on the S&P 500 index funds since 2000, they've made no money. And a good value manager probably compounded in the high single digits rather than the low double digits. You know, when you're fishing in the value pool, small cap, mid cap, large cap, like we do, you find treasures. We did a recap 3 or 4 months ago, actually longer, maybe 11 months ago, because it's about to turn long term, on a California real estate company called Tejon Ranch. And they knocked the stock down from 32 to 23 to raise some new money to develop real estate, called the Tejon Ranch. It's been there for 100 years. Turns out, you know, so we buy the thing, we own it, we're very happy, we're setting up real estate cheaply, we're kind of a seller in the high 20s because we think it's worth 32 or 3. All of a sudden, Occidental Petroleum comes out and says, we're going to produce more oil from our California fields, which are right next to Tejon. And you know how oil fields work. They run into each other. So Oxy says, we're going to beat our Permian production in the next few years from our California fields. Oxy's been strong as could be, right on the highs. And we're saying, what does this mean for Tejon? So I had some landmen and geologists take a look at old studies of these California fields, shale production as well as traditional production. And I think Tejon, which is worth mid-30s without the oil, could be an absolute gold mine. I mean, so, you know, you get surprised fishing in the value ponds.
As we look at his value, is there value in media and entertainment?
Yeah, there's value. Yeah, I mean, not the very, very leveraged. Like, you know, EMI is also being sold by Citicorp that they had to foreclose on. But there's tremendous value. People are going to figure out the music business, make a lot of money in these deals.
They're looking here at the trailing cash flow of the publishing royalties,
powerful,
right?
I mean, Comcast stole probably NBC.
Why do you say that?
I mean, I just have the impression from what they paid, they really wound up with a lot of content assets very, very cheaply.
Assets
and they can drop it into their systems, all that stuff. I mean, they're going to lose some people. They're going to lose more people than who they just left, and it's going to be tough. It'll be a challenge for them. But, you know, Brian Roberts is doing an okay job. He's finally got his stock up.
Rex, make up CMCSA, Comcast, when you can, as you can. Here's silver. I want to go like too much information. Thank you, William. Stop polishing it, sell it. I mean, way over there on the right side of the chart, folks, you can see that little white line going up in a hunt-like fashion. And there's the surge. This is a monthly chart. Weekly chart's not actually through the highs back then. What do you make of, do you want to buy cotton? Do you want to buy silver?
No, we're not a commodities player. We don't buy gold or silver. I mean, there have been some smart people putting a lot of money into gold and taking delivery, which is kind of interesting. But, you know, to me, it's not how we make our money. So.
Yeah, okay, let's bring up Comcast. It's not working there right now. Okay, they're gonna work on Comcast. Give me another small stock name like Tejon Ranch.
Well, you know, Rowan Drilling had their earnings today in a conference call. They're going to be selling and spinning off assets. They're Marathon Letourneau Manufacturing. They make big earth-moving equipment for coal and mining industries and land rigs. So that'll get, $5 or $6 or $7 of value out of the $40 stock. It'll be down to low 30s. Then you're going to have a pure offshore driller that's clean and pretty cheap.
How do you respond to the articles that are out there in the analysis of navel gazing that says not so much America's in decline, but that there's an Asian ascendancy, an Asian renaissance? Do you want to be
We're selling
abroad?
to them.
We're selling
to them. The GEs of the world, the exporters. Sears had lousy numbers. Why? Sears has stores in the U.S. and Canada. They export nothing. They have to import. Okay? Look at Sears' first quarter numbers. They're lousy. That's why the stock got hammered today. But look at our exporters numbers. Business is terrific.
And the dollar plays right into that.
Absolutely.
Bob Cinch on here in a bit. So you don't worry about the political or the economic analysis of the dollar, just simply from an equity basis. It's beneficial.
Yeah, and Brazil and China are doing great, and you want to encourage that. And you want it to expand, and you want India to continue to do great.
Matthew, the camera guy here, comes to you. He says, I want to invest. Everything in the market 100% in right now?
No, 80% in.
And the rest
Selectively, not just an index, but you got to be a stock picker.
Why do you say that? Okay, let's go right there and let's say there's stock selection versus an index fund. You believe in active management?
Absolutely.
What does John Bogle have wrong?
He's a good guy, but he's wrong. About indexing.
Okay. Well, let's go into this a little bit because we go back and forth on this. What do the index crew have wrong?
Well, we look at any index. Look at the Keefe Bruyette Bank Stock Index.
KBW.
You've got KBW, which is actually down on the year, with the markets up 8% or 10%. And there are banks in there that are fully priced. There are 10,000 banks to trade in. Find the cheap ones, the ones at 60% a book. At 5 times or 6 times recovered earnings. We refinanced one called West Coast Bank Corp a year ago. The stock went from 2 to 3.5. It's worth 5+. And there are so many clean, cheap, recovering banks to look at. And if you look at a bank index, you once again, like the Goldman Sachs chart, you had that down tick in 08 for sure. They basically went from 100 cents on the dollar to 20 cents, and in the last 2 years, they recovered to 40 to 50 cents. Banks have been sideways.
Right.
In that sideways move,
there's a lot
what's
of
happened?
Move. Right.
They've replaced their balance sheets, they've refinanced the balance sheets, they've raised capital, they've cut their non-performing assets tremendously, and they're about to start growing their loan book. And when that happens, the earnings will accelerate. Right now, the basic bank group is cheap, but don't buy an index. You got to pick and choose. So we like Key Corp, we like B of A. And we like a lot of little ones.
You like Key Corp, the super regionals, those bigger regionals get taken out of their misery?
Key Corp just raised money to pay back TARP. Several others have. Some we trade, some we just keep buying.
Great. There's the KBW Bank Index. Bring it up here on the way out. And you can see here how down it is. And this is just, half the index is up and half's down, and you got to find the ones.
But during that sideways period, they got much better balance sheets.
Thank you so much for coming in. Great update. Michael Price with us, MFP, folks. We're going to